Today on Navigating Retirement, we're going to discuss the Brexit, the United Kingdom voting to leave the European Union. And let's start, Jeff, with what the heck happened. I mean, all the polls suggested they might leave, but I think investors and the stock markets and a lot of people thought in the end the voters would remain.
I think right up to the last minute, it was, essentially everybody thought, well, it's close, but we're going to stay at the end of the day. And it ended up 52-48 to leave. And so the UK woke up with this shock that they're now moving out of the EU. I think the central point was that they wanted to be able to clinch their own trade deals. They wanted to be able to control immigration and make their own laws. And the other side of the deal was or at least the biggest piece in it was the free flow of people versus goods. And I think that's what at the end of the day set the tone for the vote.
Now, David, I was there a week before it all happened, and it was just, that was all you read in the papers, that's all you see in TV, and there was a lot of that talk. It was about immigration was the big issue, right?
Yeah.
I guess, what was your thoughts on what happened there?
Well, I think from the perspective of the markets, I was reading that I think 35%, they had a 35% chance that they would leave, right? That obviously went the other way, and what happens with the markets is they tend to overshoot when that happens. And so I took some notes about where the markets were at, the FTSE, the TSX, the US, and the pound. I looked at that, on the 23rd, and all of them dropped
as predicted.
Yeah, and when I say they overshoot, like the FTSE, which is the UK market, dropped 5.6% when we take a look at Thursday, June 23rd, what the close was versus Monday, June 27th. The TSX dropped 3%, and the S&P 500 dropped 5%. Now the pound dropped 11% relative to that. Yeah. Now, if we take a look at what happened, where we're at today, markets have all come back. The FTSE's up 9%. TSX is up 3.7 from the.
They're almost back to where they started.
Yeah, pretty well. The pound though is down 12%. So
great.
And one of the other things I think there's safe haven is bonds. So bonds
and the
are
U.S. dollar, I guess too.
U.S. dollar, yeah. That's right.
U.S. Treasuries are this morning hit what 1.3% on a 10-year Treasury. Yeah. Which I was reading is the lowest since Bob Dylan put out his first album.
Oh, yeah.
Well, Canadian 10-year bonds down below 1%.
Yeah.
Now, short term, what are we looking at here? I mean, this negotiation with the EU is going to take a couple of years at least. They haven't even triggered the leave clause yet. So, what are we looking at short term for our portfolios here in Canada, for example?
Well, I think increased volatility would be, everybody would agree on that, right? So flight to safety would be one of the results of that. So bonds tend to do well, gold tends to do well.
And it is doing well.
Yeah, oil, the debate's
good.
still out. I think some people are calling for $80 oil, over the short term, but I'd maybe challenge that. Yeah. And I think U.S. dollar obviously is going to do reasonably well.
How about the Canadian dollar, for example, and maybe could you take advantage of like buying stocks in Canada can take advantage of this situation?
From my perspective, I wouldn't try. I think you want to stay safe, you want to stay strong, and you want to stay moderately liquid. I mean, this is like they like to say, this is risk-off time. I don't think this. I mean, maybe there's better traders out there to take a chance on it, but so much of it's unknown.
You know what? Actually, I'd take an opposite side.
Oh, good. That's
because
good.
This is a consideration would be, we've got a lot of uncertainty probably with the U.S. election. Yeah. So that throws another kind of wrench in the whole situation, right? So, if I think I was at a conference and we had a strategist talking from the U.S. about possibilities. So if the markets go down between now and the U.S. election, then Trump has an 86% chance of being elected, versus if the markets go up, Hillary Clinton has an 82% chance of being elected. Yeah. And I think with that kind of uncertainty, people could see the stability of Canada as a positive thing.
Yeah, well, they're even talking. I think I heard that the real estate in Toronto might go up because the British people might be moving here, kind of thing. Americans might be coming if they don't like where the election's heading.
You know what?
Do we need the real estate in Toronto to go up even more, or Vancouver?
That's a good point. Like real estate in London, there's 500,000 workers in the financial industry sector in London,
the city. Yeah.
And they predicted that potentially 100,000 of these workers could be displaced.
Frankfurt
for
or
jobs,
Paris or
right?
something, right? Yeah.
And if that happens, you could see real estate prices drop in London, which is a world class real estate environment, and I don't know what kind of effect that would have with other cities around the world.
Yeah. Now the British government's already said that they're looking at lowering the corporate tax down to 15%.
That's
They're
right.
getting closer to Ireland's level. So they're doing things to want to maintain and tell the world that, hey, we're still open for business.
Yeah.
What do you think that means, Jeff? I guess for the next couple of years at least, anyways.
Well, I think her name's, I want to say it's Leaston, but she's one of the people that is planning to try and replace Cameron. And part of her platform is to basically kind of calm down all workers and saying, look, we'll cut a deal that allows you to stay in the UK, in the financial sector in particular. Not so. I don't know whether they start kind of rolling that way.
The advantage, of course, is English speaking, right? I mean, that's a big deal in the financial sector.
Yeah, and one of the things that was a positive spin on this whole Brexit was the concept of there's a lot less bureaucracy in England.
Getting out of the EU, yeah. There's too many
That's right.
regulations, right?
Too
That was
many
something I heard
regulations,
when I was there.
Yeah.
But if they tried to cut a deal, for example, England, like Norway has, they're outside the EU, they're going to basically get the same kind of deal, right? They're going to have to allow the free movement of people, which is one of the reasons they voted to leave.
Yeah, and I think I was listening to a German fellow speak about some of the positive things and how this really isn't going to have as big an impact as people think. So his argument was, take a look at Switzerland, who's not involved in the EU, and they managed quite well, right?
Yeah. Now, this, of course, could be the first domino to fall, which is another big fear. Right? I mean, Scotland now is talking about another referendum to leave because they want to stay in the EU. They voted almost completely to stay in. And other countries, for example, France, the Czech Republic, there's others the Holland that want to have a vote as well. What do you think that could mean?
It's going to force the EU to come to the table more than maybe they would have wanted to. Or
Cut some more deals.
Cut some more deals.
Yeah.
Because you're right. If one goes and then the others take a look, and if things turn out well for the UK, then maybe France says, well, maybe we are better off outside of this.
And the British Prime Minister thought he had a deal, right? The voters didn't like his deal.
Just from a market standpoint, today I was reading in the CFA news briefs about bond investors betting against the EU durability, right? Okay. So it creates that kind of an opportunity for people that are trading to be able to take advantage of this volatility and changes. Now, that being said, Angela Merkel said the EU expansion will continue despite the UK. So she's sort of talking about adding more Balkan
There's other countries that want to come in,
That's
right?
right.
Yeah. And
So
what does it mean long term? Is there ways you can play this? Can you buy stocks in German exporting nations because the euro's being knocked down a little bit, for example? Is there those kinds of things you can take advantage of?
yeah, there's lots of opportunities to buy international equities, and in fact, actually, Russell Investments was coming out with some of their recommendations, and one of the things that they felt, was a potential opportunity is the actual valuations in Europe now have dropped substantially and maybe present a buying opportunity. Yeah. So the main areas I think that have seen drops in valuation are probably Europe, Australia, Far East versus Canada and the U.S., which have sort of held up quite well relative to.
Yeah. Now, ultimately, because this is what we always talk about on this show, is how does it affect your retirement? I guess long term, depending on whether you're close to retirement or if you're in retirement, should you be worried?
I mean, I think one of the issues is you already had, let's call it tepid global growth. I mean, you had your issues in China. Europe wasn't doing that great. The U.S. seems to be the kind of the lone, along with a couple others. Do shocks and uncertainty like this exacerbate that and make it worse. So then you talked about the U.S. election. What happens if that comes out a little bit differently? And so do we now roll into a recession? You've got the U.S. Treasury yield curve now, which is flattening out, and if it gets to a certain point, that's technically a indicator of a recession. So
there's, you know, to Jeff's point, I mean, there's really 4 key points I think that you need to pay attention to. Is one, financial market reaction. So, you know, we've seen that there's been this flight to quality in the U.S. and dollar and U.S. bonds.
And it hasn't been as bad as we thought it would be.
That's right. And then the second point is, you know, political consequences. So a lot of uncertainty around actually who's going to lead the UK.
A lot of guys resigning over there.
Yeah, and that
Who's gonna be
coupled
left?
with things like, you know, the U.S. election and the, you know, that uncertainty, and then there's the economic growth impacts to what you were talking about in a number of different areas. You know, it's just not, you know, it's consumer and business expectations, you know, foreign investment, all these sorts of things, recession, lower interest rates, and then you know, how the central bank, you know, stepping into that, how the central bank is going to respond to it. To, you know, Mark Carney's talking about adding more stimulus and you know, reducing rates. So I guess, you know, the question that it begs me to, you know, how do you protect yourself in this type of environment? And I think, you know, you need to take into consideration your comfort level with risk, how much time you want to spend managing, you know, your portfolio, you know, what kind of fees you're paying, and you know, what kind of time horizon, whether you have need for income versus growth. And maybe I'm talking a little bit too much, but the last thing I wanted to mention, I was reading this article in the Globe, and you know, one of the things he pointed out is he said, you know, at the evening of the referendum, when I saw that they voted for Brexit, I went to bed. And so then the next morning he woke up, saw the markets were down, so he made himself a cup of coffee.
The sun's still rising. Right?
That's right.
Ultimately, they're going to do things to manage this, right? I mean, the central bank, the government. I mean, ultimately, you know, there'll be a response.
Yeah,
We expect it.
Well, I mean, not to be a conspiracy theorist, but if you look a little deeper with some of this, there seems to be a real push against the establishment, whether it's the Arab Spring, whether it's the support for Trump, whether it's the Brexit vote. People are, for better or for worse, turning their backs on the establishment, and I you know, I think the big question there is, what does that mean in terms of the stability of the markets going forward? I mean, you get the UK pulling out of, you know, saying we're going to go with the EU, we want out of Britain, and all of a sudden you got so many uncertainties, and the market doesn't do well in uncertainty.
All right. Thanks, guys, for joining us. A lovely topic, the Brexit, and we look forward to continuing with Navigating Retirement.